is Team CBPSR from University of Asia and the Pacific, who will be presenting their case paper titled Project Bridge, a platform for better MSME inclusion. We are now ready to begin. Team CBPSR, you may now start your presentation.
Okay, we'll start in 3, 2, and 1. 2 in 3 Filipinos are employed by MSMEs, organizations that face challenges in growing and securing financing, despite being the backbone of the Philippine economy. In a BCG study of 3,000 plus MSMEs, 60% want to increase revenue, 53% want to expand, and 40% want to have additional funding. On average, MSMEs from your local manufacturers, local retailers, and small-scale sari-sari stores all want an increase in scale, performance, and expansion. For sari-sari store owners, a loan could mean buying a ref to sell cold drinks and frozen goods. It could mean buying more products at wholesale prices, or it could mean renovating their storefront to attract more customers. These kinds of improvements are what help create stable income, yet the loans needed to reach these finances deprive the owners of this dream. Because of this gap, what tends to happen is that they rely solely on their personal savings or rely on informal loans like 5-6 and other lending platforms that are untrustworthy and predatory. This keeps them small, unable to attract more customers, and their savings low. The traditional understanding of this problem is solely based on access. We think it's deeper. More than access, it's also a matter of financial maturity and financial literacy. We look at it in 3 layers. The first layer is financial access. These businesses don't get loans because they lack the proper documentation that is necessary to apply. But in instances where they can, they still have no sense of confidence in knowing that they can pay these loans back and if the amount of the loan is feasible for them. This is the second layer. The third layer stems from a lack in financial literacy, in that they never get to become confident because they are never able to experience what it is like to deal with these types of loans. The core solution that needs to be built isn't a service that can give them one of these layers, it's a service that caters to all 3. This is where we introduce Project Bridge, which aims to give MSMEs the proper path towards safe and credible loans. The way it does this is by aggregating the data that these MSMEs currently have. All of their invoices, receipts, and transactions are used to create information that is useful for the business, which is shown through a dashboard that is accessible to them. It does this in 3 ways. 1, it restructures the data that they have and transforms it into a more formal document that gives them the best chance at applying for smaller loans. This addresses the problem of access. Based on the numbers, number 2, they are able to get a viable range of loans that they want and are feasible for them. Given that the results compound over time, the more you use it and the more data it has, the more you can be able to get used to managing loans. This addresses the problem of literacy. Third and last, because you can see your loan history, you have the knowledge and information of your past loans and are able to see that you paid it off, which incentivizes you to borrow again. This addresses the problem of maturity. And we know that this won't get MSMEs the biggest loan in the world, but it's about giving them a head start. And size matters because debt becomes a problem when it's too big to be repaid. But this is okay, because their first loan is the stepping stone to financial empowerment. Getting these MSMEs more documentation means giving them access to small loans, which in turn can build their credit history. This means that the more they are able to stay within the system, the process of loaning becomes easier over time. As a result, because you have more evidence and experience, the more confident you are to handle bigger loans, making you more mature in your financial decisions, which at its core helps you become more financially literate in being able to have all of this data and use it sustainably. This makes a clear difference in the lives of these MSMEs. This allows a sari-sari store owner like your Aling Nenes to finally buy that ref that she is saving up for. It allows for her sari-sari store to be able to sell more food and beverages, and it allows for her storefront to be upgraded so that more people go to her. Every single improvement in her sari-sari store is a milestone of the financial freedom she is able to attain because of the loans she is able to manage. But it's not just about her, it's also about her family. her child whose tuition fee she can finally pay off, a ruined wall in her home she can finally fix, or money for medicine that her spouse needs. This change is the same change that we want to happen for the 32 million breadwinners who are employed in MSMEs and the over 45 million people they support, improving the lives of more than half of the Filipino population. Thank you. We are now open to questions.
Thank you, Team CBPSR, for your presentation. We will now be proceeding to the question and answer portion. We kindly ask the team to keep your responses brief, clear, and concise to ensure we stay within the allotted time. At this time, I would like to invite our esteemed panelists to begin the Q&A. Thank you.
Hi. I love it that our young people are very much into going to the more marginalized group of people, no, by MSME. Just some notes. The thing is that I'm kind of like it's very difficult for me to get past that because I have this thought in my mind that it's very difficult for banks to really lend to MSMEs because of the high NPL, non-performing loans. They don't pay, no? So that's why actually in the Philippines, a lot of banks, there's a regulation that banks have to lend to MSMEs a certain percentage, right? Banks are actually willing to pay for the penalty of not meeting that percentage just so they don't acquire the risk of lending to MSMEs because of that high risk of default. Okay, so from my studies before, my studies on this is that the success percentage goes high when there is actually sort of like a buddy system to work with the SMEs for them to know, learn the business and actually to pay, no, to pay the loans. This is the same problem as with the farmers, no. The loans are there, but once they get the money to pay is another big problem. Okay, so given that scenario that I've got, so how does your project or your proposal address those kinds of apprehensions?
Okay, so we actually did do the research too, and you're right. We also found out that it is incredibly hard for these banks to want to give to these MSMEs. Where Project Bridge lies within that difficulty, right, is in being that buddy system as well. Because other institutions or other reforms do make the process of getting these loans a bit easier. But where we have is in being able to manage these loans as well. So where Project Bridge targets is more so on the small and rural banks or the microfinance specific cooperatives that exist, or in microcredit institutions that are already aligned with targeting smaller MSMEs.
Just to add to that, sorry, may I add to
Okay.
that?
Okay, I hope what you will add is going to concretize in our head. How do you do that buddy system?
Oh,
Okay.
but more so, it's more of the building the credit history because banks don't trust MSMEs. A factor due to that is that the lack of history and the lack of like previous transactions, and by allowing them to the access to like smaller banks, smaller digital banks and rural banks, we build those credit histories in order for them to access bigger loans.
I think the problem more of banks is the high NPL. That's why the high risk of non-payment. So I wonder if you can address that as well.
Yeah, I think my group mate si Jaron mentioned it. I think a lot of the banks that fear these kinds of non-payment, these defaults are larger banks, right? So larger banks are more apprehensive towards actually giving loans to these MSMEs. But as he stated, we're not just going to be limiting ourselves to reaching out to these big banks like BPI, BDO. We're also going to be targeting microfinance specific cooperatives and microcredit institutions. And we believe the getting that first loan is important because getting that first loan is what will help these businesses build the credit history, if ever they want to be able to take out larger loans in the future, right? Because every business needs a starting point, and what we want to do is provide that stepping stone so that they can get into that, right? And Project Bridge is there to help them manage their loans like all the way like through the process.
Okay, Sir Ben?
A quick one. Coming from the banking sector, most usually ito mga MSMEs, I mean, agree ako data is an issue, but most of these MSMEs, particularly micro, if you're talking about sari-sari stores, most of them actually don't even have audited FS, which is probably one of the main requirements of a bank. That's why usually they go for personal loans or credit card loans instead, right? So how do you encourage these banks to sort of move towards the high interest rate PLs if they don't even have an audited FS for a business loan type application? Tapos sari-sari store example, usually sold club yung mga to.
Yeah, that is the main problem that we really want to like solve, and the solution for that is in being able to start small, because the realistic loans that these businesses or these MSMEs will likely be getting won't be in the millions or won't be even in the 100,000s, right? They'll probably be minimum 5,000. In the BCG report that we did research on, that was the number that was given. So being able to start in a small like number or the small loan, getting a ref, for example, or a specific piece of equipment, and then building up that skill of wanting to pay that loan or being able to pay that loan, that is how you transition them not having any experience at all to having some experience, which will in turn benefit them in the future when they start to get these more formal loans.
I want to pick your brain. How do you feel about yung mga tipong one hand wherein sa one hand ka, well, sorry, not to pick on a specific brand, like if you borrow from the likes of like mga online lenders with an interest rate of maybe 36% over per annum. Kasi that's where most of these sari-sari store go, no? For bite-sized loan. Kasi a big bank probably will treat the 5,000 peso loan as a personal loan. How do you feel about the fact na most of them do get financing, but non-bank route sila? Like online lenders, like one hand to cite an example with a high interest rate.
I think
Do you think it's an issue or it's like a step solution?
I think the issue behind that is more so on how the businesses or the sari-sari stores themselves probably are not so financially literate in being able to understand the nuances of that specific thing. Or because they have like only this alternative, it's not so clear within their business decision on whether or not this is a good thing or to the extent of how good this loan is for them. So that's why it's also a matter of them, trying to become more financially literate through this platform.
Last for me, how do you incentivize institutions to share data, right? Because obviously, like, one big problem you mentioned is data sharing, right? And formal aggregation of data. Kasi usually, financial institutions do not want to share data kasi yun nga yung competitive advantage nila, right? They have more information, therefore they can lend properly. How do you incentivize them to properly share data with one another? And then I'll turn over to Sir Paul.
Sorry, okay. I think this question pertains more to ano kasi. So our project kasi requires inputs in order to generate its outputs, right? And that's where the financial data will come in. Well, the thing is, the people who will actually be inputting this data are the businesses themselves, and the businesses themselves have their transaction histories. So for example, like if a business has GCash or Maya, they can request for their transaction history, right? You can manually request for your transaction history through GCash and Maya. And you can also ask for those kinds of data through the bank. Because ultimately, like we searched it up, and according to, I think it was some kind of BSP circular, ultimately the transaction history kasi belongs to the user. It belongs to the user, right? So the only thing that they really need is the consent of the user in order for them to be able to share it to these certain platforms.
Okay. I'll turn over to Sir Paul. Short on time.
Well, for me, actually, my question is that aside from Sir Ben's inquiry, how will you incentivize the banks to cater this sector? I would like to know what will be your game plan um, to encourage, kasi normally, di ba, sabi nga ni Ms. Bea din earlier, normally the MSMEs have I recorded high NPL, especially during pandemic. Most of them were affected, di ba, during COVID. So right now, how can you answer my question wherein the banks will require a collateral for MSMEs to avail of a loan? Kasi right now, the banks really cater to this one. However, the problem is that these entities cannot meet the minimum requirements of the bank, di ba? Like for example, they need to be profitable for the past 3 years. So dapat it should be shown in their AFS, di ba? And then, yung sa collateral side naman ng bank. Kasi, syempre, the bank really need to take care of themselves also. Because remember, they need to protect the money of the depositor. So, yun lang.
Okay, so I think this boils down again to actually knowing how big of a loan MSMEs want to take. I think the reason why a lot of banks are apprehensive, again, they want to look for collateral because oftentimes the loans that require a lot of collateral are bigger loans. But then again, as we've stated, we want to start small. So smaller loans will probably require, or banks probably won't have as high of a requirement for collateral for if the loans are small. And these are the kinds of loans that we want to start giving to MSMEs. And then through taking out these loans, hopefully they're able to build their business, they're able to acquire more capital, they're able to acquire more assets, so that hopefully they can acquire bigger loans in the future. But it's not only that, because managing debt really is a skill. And so we want to make sure that through being able to use our platform, these MSMEs will not only be able to build up their wealth as they continue to use it, but also they're going to be able to build their skills in being able to manage debt, so that hopefully banks are going to be more willing to lend bigger loans in the future to them.
Do you think that better option is to partner with credit card companies instead of banks? Because you're saying that you really want to start with a small amount, diba? How much are we talking about here? Because normally mga sari-sari store, magkano lang naman yung working capital requirement, right? So if smaller lang yung amount, I think the best option is that to partner with credit card companies, provide a specific criteria or features that will fit the MSMEs that you want to capture. Diba? Because it's not the same with the bank, wherein the bank will require a set of requirements in compliance to be specific requirements also. So, diba?
Yes po. Yeah, I think we can definitely look into that and consider that po. Yeah, you're right. A lot of the loans that these, for example, sari-sari stores take are pretty small, mga 5,000 pesos, 10,000 pesos. So, yeah.
Yeah, kasi I think you also need to check on the captured market of different types of bank, diba? So, I think digital banks can capture this one, credit card companies can capture this one, but normally universal and commercial banks will definitely pass on this. It's because they will lend on the MSMEs if they have collateral, because they need to protect themselves, diba? You have to remember that by protecting the depositor, they need to secure the loan. So the second option is to get a hard collateral, diba? So yeah.
Yeah. Yes po. Well, our solution's flexible naman po. We're open naman to opening it up to a lot of alternative forms of credit. So not necessarily just banks.
Okay, that will be all for me.
Thank you, Team CBPSR, for your presentation. And thank you to our esteemed panelists for that very insightful Q&A session. So on behalf of the organizing committee, we sincerely appreciate the time, effort, and dedication you invested in your presentation today. Congratulations once again for making it to the semifinal round